Good day, everyone. This is Si Wing Yi from the Yi Real Estate Network. Thank you for attending this next educational module. And this module is creative real estate investing using your IRA. And my speaker is Mr. Bill Neville from Entrust Group, who happens to be in headquarters in Oakland, California, out in our neck of the woods. So anyway, I know Bill presented our live event about a week ago, and we really enjoyed his great live presentation. And however, the remaining 99% of our members still have not heard Bill's presentation. So without further ado, Bill going to spend approximately 30 minutes to go over the benefit of using your self-directed IRAs to buy investment real estate. So, Bill, take it away, my friend.
Okay, thanks, Huing. So that's me. This is the title of the presentation, Creative Real Estate Investing Using Your IRA, and I am Business Development Manager with the Entrust Group. So before I get started, I do have to put this up to point out that I will not, Entrust Group, and in this presentation, I will not be giving any investment advice or endorsing or promoting any particular investment, including I'm not promoting the idea of investing in real estate. I'm simply educating about if you want to invest in real estate inside your retirement account, this is the way to do it. So any investments that you do choose to do, we highly encourage you to discuss with CPAs, financial advisors, attorneys, anybody in your life who you feel confident and comfortable with discussing investing. But it's not going to be Entrust that gives any advice. We are not advisors. We are administrators and custodians of what are called self-directed retirement accounts. And just real quickly, a little bit about the Entrust Group. We have been in business since 1981, so it's actually about 38 years that we've been in business, and we have about $3.5 billion in investor assets. So we need to update that screen, but that's about how much we hold. And we have about 22,000 account holders right now that hold accounts with Entrust. The majority of our staff are certified IRA service professionals, including myself. We're headquartered in Oakland, California, but we do have offices throughout the United States. We have our Precious Metal Center is in Reno, Nevada. I have a counterpart, a business development manager who works out of an office in Southern California that handles that region of the country, the Southwest region of the country. I handle the Northwest region of the country over to Illinois. We have a business development manager based out of New Jersey who handles the Northeast from the top of the Northeast over to Ohio or Michigan and down to like Virginia. And then we have somebody based out in Nashville, Tennessee who handles the Southeast part of the country. So anybody who is looking to open an account will have a business development manager assigned to them to be the single point of contact. We focus on education. We're the only company in our space that has a national continuing education program that provides 2 CE credits. We have one for CFP, Certified Financial Planners. We have one for CPAs, and we have one for realtors. The one for realtors is state specific, so you have to be in a specific state that we have the allowance to provide the credits. And that's about enough about Entrust. Let's get into what is a self-directed IRA and what are we going to be doing. So what is a self-directed retirement account? Specifically real estate IRAs, we're going to get into that. What are the benefits for real estate professionals if there's any realtors attending? What are the different options and restrictions that you can invest in a retirement account? Some rules around disqualified persons and prohibited transactions that's important to know. What are the different ways you can fund an IRA? Some transaction examples, then how to get started. And typically we have a Q&A at the end, but since this is just being recorded, unless C-Wing has a few questions he wants to ask, then we probably won't have that. So what exactly is a self-directed retirement account? When you hear the term self-directed IRA, it essentially means 2 things. It is an account in which you as the account holder are in charge of making all the investment decisions. So as I mentioned earlier, Entrust does not advise you. We do not sell you any particular investments. We do not advise you on what to invest in. However, you're not limited to investing in just publicly traded stocks, bonds, and mutual funds when you have your account with a self-directed IRA custodian. So you can invest in things outside of just the traditional stocks, bonds, and mutual funds. You can invest in things like real estate and precious metals and private placements and promissory notes, tax liens, trust deeds, pretty much anything that you want to invest in inside your retirement account. The IRS allows you to. You're allowed to invest in other alternative assets, but the custodian you have your account with has to be willing to hold whatever asset it is that you want to invest in. So most people who have a retirement account, whether it's a 401k or a pension plan or an IRA or a 403b or any type of retirement account, they typically have it with a bank or brokerage firm like a Charles Schwab or Merrill Lynch or Fidelity or Wells Fargo or any of those companies. They all will hold and be custodians for retirement accounts, but from an investment standpoint, they limit you to only investing in publicly traded stocks, bonds, and mutual funds. So if you have an account with, let's say, Fidelity or Charles Schwab or Edward Jones, and you want to invest in real estate, and you go to them and say, I want to buy this rental property, I want to use this retirement account and buy this property that I found is an investment property, they would tell you that they don't do that. They might even tell you that you're not allowed to do that. That would be incorrect if they told you that. You're allowed to do that. You just have to have your account with a custodian who's willing to hold those investments. So that's where Entrust comes in. Those custodians, those banks and brokerage firms aren't willing to hold things other than publicly traded stocks, bonds, and mutual funds. So for that reason, most people who have a retirement account think the only thing you're allowed to invest in are publicly traded stocks, bonds, and mutual funds, but that's obviously not the case. You're allowed to invest in other things. The custodian that you have has to be willing to hold it. So that's where bullet 3 is. All securities investments are held in an account administered by a custodian or trustee. When you have a retirement account, when you have an IRA or a 401k, the custodian has to be the entity that holds the cash, processes the investment, processes the transaction, and holds the investment on behalf of the retirement account. So when you buy a stock or a mutual fund inside your Fidelity retirement account, Fidelity is holding custody of that stock or mutual fund on behalf of your retirement account. So if you want to invest in real estate, buy a rental property, then Entrust Group holds title on that property for the benefit of your retirement account. So it's the account that ends up owning that property the same way it's the account that owns any stocks or mutual funds that you invest in. So what are the benefits of self-direction? Well, the first one, the most obvious one, is you get to make your own investment choices. So when you have an account with a bank or brokerage firm, they're going to give you a list of mutual funds, and they're going to say, these are what you can invest in inside your account with us. Or if you have a 401k with a company that you work for, usually they're going to give you a specific list of funds that you can invest in, or you can buy publicly traded stocks. But they're limiting you to publicly traded stocks, bonds, and mutual funds. They're probably also going to advise you. They're going to give you advice on, they'll find out what your risk tolerance is and what your age is and have a conversation with you, and then they'll recommend a handful of funds or so that for you to invest in. But in reality, you're allowed to invest in other things. And so through a self-directed IRA, if you want to invest in real estate, if it's something that you're educating yourself about, or if you have a startup company that you're aware of that you think would be a good investment, or if you want to use your IRA to lend money, you can use your IRA to lend money. You can be the bank. All of those things are allowed, and it gives you the flexibility to make your own investment decisions on these different types of investments and not just be limited to stocks, bonds, and mutual funds. So it allows diversification, right? So when you have a broker that's recommending 4 or 5 different funds and telling you that you're really well diversified because you have a small cap fund and a large cap fund and an international fund, and they say you're really well diversified, but the chances are that those are primarily still invested in the stock market. And when the broader market goes up, then all the funds go up, and when the broader market goes down, they all go down. And so it's basically going to flow depending entirely on what the stock market does. And maybe you have some bonds in there as well that might react a little bit differently. But if you hold real estate, or if you hold precious metals, or if you invest in a private company, or you do promissory notes or tax liens, trust deeds, like all those things, they aren't necessarily going to move in the same direction as the market will. And so it gives you an opportunity. Self-directed retirement accounts give you an opportunity to truly diversify your retirement account instead of just having a handful of different funds that are all invested in the stock market. And then finally, you get the tax benefit. So when you buy real estate When you buy real estate outside your retirement account and you want to sell that property, or if you get rental income that's coming in, you have to report that on your taxes and pay taxes on it. Now, you get to write off certain things like depreciation, so you might end up taking a tax loss, or you might not end up getting as much taxable income. But when you go to sell that at the end of the year, you have to, or at the end of the time that you want to sell it, you either have to add the depreciation back in and now pay taxes on it, or you have to 1031 exchange it for another property, which means you're constantly invested in real estate. But within a retirement account, the example I gave you is if you own it personally. But within a retirement account, the account owns the property. So any revenue that's generated, any rental income gets paid into your retirement account. It doesn't get paid to you personally. It gets paid directly to the account. If you sell the property, it's the retirement account that sells the property. And since it's held inside a tax-sheltered vehicle, the retirement account itself, there is no need to do a 1031 exchange because you don't have to try and avoid capital gains tax. The fact that the property is held inside a retirement account means that it's already held inside a tax-sheltered vehicle. So you get to get the tax benefit of the fact that it's a retirement account that owns the investment that you hold. So what is a real estate IRA? It's very simply, it's an IRA that invests in real estate. So there isn't a type of IRA called a real estate IRA, just as there isn't a type of IRA called a self-directed IRA. Self-directed is a description of the industry that we're in and the service that we provide that allows you to self-direct your account into whatever you want to invest in. And then the same thing if you hear the term real estate IRA, it's just simply a real estate that holds or simply a retirement account that holds real estate. So when you open an account with us, you still have to choose a type of account. So you can either open a traditional IRA or a Roth IRA, or if you're self-employed or own a business, you can do a SEP, a simple, or an individual 401k. We have all of those accounts. We also hold health savings accounts and Coverdale educational savings accounts. So if you have an HSA, you have a high deductible health plan and an HSA that you're contributing to, you can self-direct that HSA as well. So if you want to invest the HSA in real estate or things like that, you would just open an account with Entrust, an HSA account with Entrust, transfer the money over to us, and then instruct us to make the investment. So when you if you decide that you want to invest in real estate or some other alternative asset, and you open an account with a company, with a self-directed company like Entrust, we're still going to ask you to choose a type of account. Again, self-directed is not a type of account. It's a description of the service we provide. So you can self-direct any of those accounts. You can self-direct a traditional, a Roth, SEP, simple, individual 401k, or like I said, a Coverdale educational savings account or a health savings account. So if there's any real estate professionals, any realtors who are watching this, some benefits that you particularly get in this, you get to invest in what you know invest. You can use your own IRA or your own 401k to invest in real estate. And since you make a career out of real estate, it would seem to make sense that you would want to invest in an asset class that you are most comfortable with instead of having some broker who's suggesting some mutual funds. This gives you the opportunity to invest in an asset class that you're most familiar with. As self-employed individuals, as independent contractors, you can take advantage of higher contributions. A SEP IRA or an individual 401k allows you to contribute up to $56,000 as a self-employed individual, depending upon your income. But it does give you the ability to make higher contributions than a traditional or Roth, where the contribution limit is $6,000 or $7,000 if you're 50 or older. And then as people selling real estate, knowledge about self-directed IRAs is an opportunity for you to grow your business even more. There is currently over $7 trillion in IRAs, and real estate is the #1 investment in self-directed retirement accounts. Of that $7 trillion, only about 3% of that is currently held in self-directed accounts, which means 97% of that money is either in stocks, bonds, and mutual funds, or it's in cash. There's a pretty significant amount of that, probably 10, 15% of that, is currently in cash inside retirement accounts. So if you have people in your life, you have your clients or people that you know who might want to invest in real estate but don't think they have the money to do it, well, they might have it inside their retirement account. So it's an opportunity for you to sell additional properties and close more deals. So you can tap into a new market of real estate investors. Separate yourself from the competition. Not a lot of, although I try and get in front of as many realtors' offices as I can to present this, there's still a significant percentage of the realtor population that has no idea about self-directed IRAs that you can invest in real estate. So if you have a property that you think would particularly make a particularly good investment property, and you start promoting the idea to other people that they can do it inside a retirement account, you're going to have a lot of people in your industry that actually don't know about that and can't do it. So you can separate yourself from your competitors, and obviously offer additional value to your clients that some of the other realtors in your space aren't doing because they're not aware of it. So what kind of real estate can you invest in inside a retirement account? Well, almost anything. I'm going to put that bullet point down there, not just from a standpoint of real estate, just in general. You can invest in almost anything inside your retirement account. Real estate is easily the most popular, but we get a lot of people who are investing in private companies like LLCs, limited partnerships, investing in startup companies, doing tax liens, trust deed investments, offshore real estate. We've had people invest recently in cryptocurrency funds, people investing in the cannabis industry, whether it's real estate in the cannabis industry or cannabis industry companies that people are investing in. We had somebody invest in a racehorse one time inside their retirement account, in cattle, in an airplane, private airplane. I mean, these things, as long as those assets are being used for investment purposes only and not for personal use. So if you buy a property inside your retirement account, it has to be for investment purposes only. You can't use it as a vacation home or a second home. But as long as you're planning on using it for real estate or for investment only, then you can invest in almost anything inside your retirement account. What can you not invest in? This is what you can't invest in: collectibles, life insurance, and S corporations. So collectibles, as it says there, any work of art, an antique, metal or gem, other than there is, as you can see, exceptions: gold, silver, platinum, and palladium bullion of a certain purity. So it's based on the finest. So there's investment grade gold or silver, and then there's coin collections. And your IRA can hold investment grade metals, but it can't invest in a coin collection. So same thing there, any stamp or coin, that would be considered collectible. Then alcoholic beverage, like wine, right? Some people hold wine that can appreciate in value, but that's not allowed to be held inside a retirement account. Now, as like it says, any work of art, you can't buy art and hold it inside your retirement account, but you could invest in an art gallery inside your retirement account. You can't hold a wine, for example, but you could invest in a winery, as just an example of investments that you can do inside your retirement account. And then again, life insurance, and then S corporation. It's based on how S corporations file their taxes, that IRAs are prohibited from investing in them. So you can invest in an LLC, an LP, a C corp, like any type of corporation you can invest in other than S corporations. So we're going to get into talking about what's considered a prohibited transaction, and prohibited transactions are particularly associated with a disqualified person. So there are certain people that your IRA is not allowed to do business with, essentially, and those are considered disqualified persons. So you, your spouse, your ancestors, so you as the account holder, the account holder's spouse, the account holder's ancestors, so parents, grandparents, the account holder's lineal descendants, so children, grandchildren, great-grandchildren, et cetera, spouses of lineal descendants, so if you have kids that get married, and then a fiduciary of your account. So if you have a CPA or somebody like that would be considered a disqualified person to your IRA. So what does that mean is that your IRA can't engage in what's called a prohibited transaction, which is improper use of your IRA plan by you or any disqualified person. So we gave some examples of what those are. So your IRA can't borrow money from a disqualified person. Your IRA can borrow money, and we'll get into that, but it can't borrow money from, so you as the account holder can't loan your IRA money. Your spouse can't loan your IRA money. Your parents, your kids are not allowed to lend money to your retirement account because they are disqualified persons to your IRA. If you have an IRA, if you have a property, you've used your IRA and you've bought a rental property and your IRA owns that property, and someday you want to sell that property, you can obviously do that, but you can't sell that property to a disqualified person. So you can't sell the property to yourself, your parents, et cetera, right? You can't use your IRA as security for a loan. So if you have a property held inside your retirement account and you want to go to a bank and borrow money to buy another property, you can't use that property held inside your IRA as collateral to personally borrow money, right? The IRA itself can borrow money, but you as an individual, can't go and make a personal loan, borrow money personally from a bank or a lender, and use your IRA or any assets held inside your IRA as collateral for that loan. And then buying a property for personal use, right? So if you want to buy property inside your retirement account, it has to be for investment purposes only. So a disqualified person is never allowed to stay in that property or do work on that property, do physical labor on that property. So if you buy property using your IRA, you, your spouse, your ancestors, your lineal descendants, kids, etc., can't ever stay in the property or do work on that property. I thought I had one more bullet coming up. So I'm going to show you some funding options, some different ways that you can use your retirement account to buy real estate or any other investment for that matter, but we're focusing on real estate. Direct purchase using cash. You can partner your IRA with other investors. You can use leverage or debt financing. In a sense, the IRA can borrow money. And then finally, you can establish an LLC and have your IRA invest in an LLC and have the LLC invest in something. And I'll explain when we get to that how exactly that works. So let's use the most obvious example. The most frequent example is a direct purchase. It's the simplest, it's the quickest, and you're simply using cash inside your IRA to buy property. So in this example, we're out here in Northern California, and people buy investment properties up near Lake Tahoe to go up there and ski and spend a weekend, et cetera, et cetera. But you decide you want to use your IRA to buy a rental property up near Lake Tahoe. So the entity that's buying that property is your retirement account. So when you drop the purchase contract and on all the closing documents, and ultimately title on that property is not owned by you, right? If your name happens to be Jay Smith, you're not buying the property. Your retirement account is buying the property. So the entity on title would be the Entrust Group for benefit of Jay Smith IRA account number, then whatever your account number is with us. So the FBO stands for benefit of. So the custodian of your account, it holds title on that property. So the purchase contract and all the closing documents, when it shows who the buyer is on that property, it's not your name, it's the Entrust Group, FBO, your name and account number. For the contract, we have to sign the document on behalf of the IRA, but we do ask our account holder to add what we call their read and approved signature. So on the signature line, on that purchase contract and on any closing documents, it's going to list the Entrust Group, FBO, your name and account number is the buyer, Entrust as custodian of the account, signs on behalf of the IRA. But part of our business policy, we ask our account holders somewhere in the margins of that agreement to just sign with what we call their read and approved signature. Just write the words read and approved and sign next to that. So if there's any earnest money deposit that must be paid to hold that, it's got to be paid from the IRA, not you personally. You're not writing checks from your personal savings. You're writing checks from the retirement account, and it's the custodian, Entrust, that's writing those checks because we're holding the funds on behalf of the IRA. And then if it's rented out, all the rents get paid into the retirement account, so the tenant makes the check out to the Entrust Group, FBO, your name and account number, sends it to us. We deposit into your account. Any expenses like property taxes, insurance, maintenance, things like that, get paid from the account. So you send us the bill, and we pay it from the account. So all income generated from the investment and all expenses associated with the investment must flow into and out of the account because it's the account that owns the property. And as I mentioned earlier, a disqualified person can't stay there, can't use it as a second home or a vacation home, and you can't provide sweat equity. You can't do work on it. You can't do physical labor on it. So if you want to do work on the kitchen, or if you want to paint it or even cut the grass or anything like that, you have to have non-disqualified third parties do that work. And then if you're hiring a contractor to do any of that work and they're charging expenses, there's a fee to be paid for that. The account has to pay that expense. The account has to pay for the work that's being done. All right, second option, besides using cash, your IRA can partner with others on an investment. It can partner with other IRAs, it can partner with your own personal funds, or it can partner with other people's IRAs or funds. So the ownership is proportionate to the investment percentage for each partner. So in this example, somebody has a son or daughter that's going off to college, and so they decide they're going to use their retirement account to purchase a rental property up in that city. So UC Davis has a University of California Davis branch, And so in this case, husband and wife IRAs are going to partner with each other. Now this is, it says, permitted at time of purchase only. Now remember I mentioned that there are disqualified persons and prohibited transactions. So if a husband's IRA owned a property 100% and said, well, I want to add my wife's IRA on as a partner, that's prohibited because the IRA is a disqualified person to the other IRA. The husband and wife are disqualified persons to each other. So if one IRA owns an investment, the other IRA is not allowed to come in as a partner after the process has been, after the account already owns an investment. But in the case of a new investment, and you want to partner your IRA with perhaps your spouse's IRA or your own savings, for example, you're allowed to do that as long as you're doing it at the time of a new purchase. So this property is being bought from a non-disqualified third party, and they're going to partner their IRAs so that each IRA becomes a percentage owner in that property. So in this case, we're going to say, and it could be any percentage, but in this example, each IRA is going to invest 50% of the purchase price. So property is being bought for, let's say, $200,000, $100,000 coming from the husband's IRA, $100,000 coming from the wife IRA, which means that title is held in the names of each IRA with a listed owner percentageship. So it'll be the Entrust Group FBO, the husband's name and account number as to an undivided interest, 50%. The Entrust Group FBO, the wife's name and account number as to an undivided 50% interest. So what that means is that each IRA owns 50%. Each IRA is responsible for 50% of the expenses. Each IRA receives 50% of the income, because in this example it's 50-50. Now again, you can do any percentages. You can do 80-20, 90-10, 70-30, etc. But whatever percentage you establish when you buy the property, then each retirement account is responsible for any expenses at that percentage, and when it's rented out, each account receives its percentage of income generated from that property. And in this example, their daughter is going off to college at UC Davis. The daughter is not allowed to stay there. She can't stay there for free. She can't stay there for fair market value. She can't stay there, right? Because the daughter is a disqualified person to each of their retirement accounts. Okay, third option of a way that you can use your retirement account to buy real estate is through debt financing. There are financial institutions that will lend your retirement account money in order to buy a property. So what that means is that it has to be a non-recourse loan. What that means is that the borrower, which will be the retirement account, so on the loan documents for the lender, the bank is going to drop a mortgage note, and on that document, the borrower will be the Entrust Group FBO, your name and account number. It's the account that is the borrower. The rule is that has to be a non-secure or a non-recourse loan. So what a non-recourse loan means is that if the loan were to default, if the account were to default on the note and doesn't pay the loan back, the only recourse that the lender has is to foreclose on the property. They can't go after you personally. You're not allowed to have any personal guarantees in that loan document. And they can't go after any other assets in your IRA, and they can't go after any of your personal assets. Again, because you personally are not the borrower on the property. The retirement account is the borrower. So a non-recourse loan is a note secured solely by the property. And in case of default, the lender can only seek to claim the property, can't go after any other assets. Typically, we see a loan to value is going to be a little more strict. You're not going to be able to put 20% or 10% down. It's usually more like 30 or even 40% down is what they're going to look for. Credit check is not applicable. You're not the borrower, so why run a credit check on you when you're not the borrower? It's the retirement account that is the borrower. And then what is known as unrelated debt financed income tax may apply. So if you generate income from the investment and a percentage of that income is generated from borrowed money, that percentage of income that came from borrowed money, net income, may be subject to what's called UDFI, unrelated debt financed income tax. So that's another expense, just like property tax is an expense. It's an expense that your IRA may potentially have to pay to cover the income, to pay an expense on the income that was generated from the borrowed money rather than solely from the IRA money. I'm not going to get too into the weeds on UDFI. You can research it, and if you have questions about it, then you'll have my contact info at the end of this. We can have a conversation about how exactly that's calculated. Then the final way that somebody can use their funding option is through a single member LLC. And in this example, if you ever hear the term, if you are gonna after watching this webinar, you decide to do some research and you hear the term checkbook IRA or checkbook control IRA, this is what they're referring to. They're referring to using an LLC owned by your retirement account as a pass-through entity to give you checkbook control, right? So in this case, instead of your IRA investing directly in a property, you establish an LLC where you name the IRA, again, the Entrust Group, FBO, your name and account number, as the member, the sole member of the LLC. And instead of having your IRA invest directly in a property, like all these examples I gave you, the partnering, the buying with cash, the leveraging, all assumes that the IRA is going to hold title on the property. But you're not required to do it necessarily directly from an IRA. You can establish an LLC where you name the IRA as a member and have your IRA invest in the shares or the ownership of that LLC. And then you can name yourself as the responsible party or the manager of the LLC. And as manager of the LLC, you establish the LLC, you establish the bank account for the LLC. You then instruct Entrust to invest the money from your retirement account into that LLC, and then we send the money to the bank account that you've established. And now as manager of the LLC, you now have checkbook control over that fund. So if you're going to go buy a property, it's no longer the IRA, it's no longer the Entrust Group, FBO, your name and account number that's going to be on title on that property. It's the LLC that's going to hold title on that property. So the LLC essentially becomes a pass-through entity that gives you checkbook control over the funds. Right? The IRA invests in the LLC invests the property. The rental income that's generated from it gets paid back to the LLC. Any expenses like property taxes, insurance gets paid from the LLC. But again, the IRA owns the LLC. So at some point, if you want to take a withdrawal of that, so if you're generating rental income and you want to withdraw that money as personal income, you want to make a withdrawal, then the money has to go from the LLC back to the IRA, and then you take a withdrawal from the IRA. Because again, it's the IRA that owns the LLC, not you. You can't take a withdrawal directly from the LLC. You also can't pay yourself any kind of management fee. Like the only return on investment that you can get from that LLC comes from the property or properties or investments held inside the LLC, and that flows back to the LLC, and then from the LLC back to the IRA. So the advantages, as you've probably been reading, it affords you checkbook control. You have, instead of the Entrust as custodian holding the cash and writing the checks, you have the flexibility to write your own checks from the LLC. You have immediate access to the funds. You don't have to contact Entrust every time you need a check paid or an investment purchased. It can potentially save you on fees. Now, there are costs to having an LLC that you have to pay the state. There's probably going to be a cost to establish the LLC that you have to pay to the state. But from a standpoint of how retirement account custodians charge their fees, in our case, we have a per asset fee. We have a transaction fee. If you're no longer paying us as much of a per, if you have like one LLC holding multiple assets, then you're potentially saving on our fees because we have a per asset fee. And also, you don't have to pay us a transaction fee every time you process a new investment because it's the LLC that's processing it. So there's potentially savings on fees. Of course, that's offset by the fact that you will have some additional fees for the LLC that you don't have to pay when you don't have an LLC. The LLC will incur fees to the state. And then you get some limited liability protection from the LLC, although the IRA itself provides some limited liability protection as well. What are the disadvantages? Again, it's cost to create, so that's going to potentially offset some of the savings on fees. You're responsible for maintaining the records of the LLC. Once the LLC is established and Entrust funds the LLC, the asset that we hold inside the account is the LLC. Any transactions that funnel through the LLC, any purchases, any paying of bills, any income that's generated from it, is all flowing into and out of the LLC itself, and you as manager of the LLCs, you have to maintain good records for that. And then you may be, because it's an LLC, you may be subject to state taxes and filings. So a lot of times when you have an IRA that owns an LLC, because it's owned by an IRA, it's a disregarded entity, so there aren't typically taxes that have to be paid, but there are oftentimes reports that have to be filed. So you might have to file tax forms without necessarily having to pay taxes. And so what's the process of doing a self-directed IRA? Well, one is open an Entrust account. That takes about 10 minutes if you go to our website and open an account. click on Open an Account at the top of the screen. It won't take you more than about 10 minutes to open the account. To fund your account, you can either make an annual contribution. You can transfer over from an existing IRA, or you can roll over from a 401k, pension plan, 403b, or some other qualified plan. So again, these are retirement accounts. These are IRAs and 401ks, just like you have an IRA with 401k with Charles Schwab or Fidelity. From a legal standpoint, from a tax roll standpoint, from a contribution roll standpoint, from a distribution roll standpoint, all those are exactly the same as a traditional IRA or Roth IRA or 401k with a traditional brokerage firm. The only difference is the assets that we are willing to hold that they are not. So you open the account, you fund your account. Transfer or rollover typically takes about 5 to 7 business days to transfer or rollover from most custodians. That varies per custodian. And then the final step is you instruct Entrust to purchase whatever investment is that you want to make. So you submit the investment documents to us, the purchase contract for the property, all the closing documents, and the name of the IRA. We review and process those investments. We review those documents, we sign them on behalf of the IRA, and we process those investments on behalf of your IRA. So to summarize, you have lots of different investment options inside a retirement account. It's up to you to figure out what you want to invest in. If you want to invest in a non-traditional asset, then you're going to need to have your account with a self-directed custodian like Entrust. As far as the ways you can invest, you can just use cash inside your IRA to buy it. You can also partner your IRA with other investors. You can do a single member LLC, or you can use non-recourse loans, debt financing. And then as a reminder, before you do any investment, make sure you do the due diligence. Note that Entrust as custodian is not going to do any research or due diligence on your investment. If you decide you want to invest in a private fund or in cryptocurrency or in a startup company, it's up to you to do all your own research and due diligence on that investment, because Entrust is not going to do any. We will process the investment per your instruction, but we don't do any research on your behalf. That's your responsibility. Same thing with managing a property. We don't manage the property for you. If you're going to have a property inside your retirement account, it's your responsibility to rent it out or hire a property manager or to get work that's done on it or collect the rent or whatever that needs to be done. We are administrator and custodian of the retirement account. We're not a property manager. We don't manage the property for you. Make sure you work with a good IRA custodian administrator. Work with a good realtor and title company, obviously. Make sure that when you go to buy a property using your retirement account, you title that in the name of the IRA, that the purchase contract and all the closing documents are in the name of the IRA as the borrower. And then you're not required to have a property manager if you use your IRA to buy a property, but it's a good practice. It's highly recommended because you don't want to cross that line of committing a prohibited transaction by, for example, receiving the rent and depositing it into your own account. That would be considered a prohibited transaction. Having a property manager to create that third party to ensure that you keep a distance from the transactions helps ensure that you don't commit a prohibited transaction. But again, it's recommended, but it's not required. You're not required to have a property manager inside your retirement account. And that is it. That's a quick, relatively quick, I guess, summary on what we call creative real estate investing inside your retirement account. There's my contact information. If you do have any questions, please don't hesitate to call me or email me. I'm going to give you a different phone number. That's my cell. If you want to call our office, it's 510-587-0950, and my extension's 237. I prefer you call that number if you do call.
Wing. Yeah, Bill, well, very, very good presentation. Very concise, very organized, very understandable. And each time I hear your presentation, I'm learning more and more that allow me to have more confidence in consulting with my member investors to educate them about the power of using their self-directed IRA to purchase real estate. So, so we're looking forward to working with you. We are definitely in the right fit, and our investors will look towards you as to do the custodianship for the IRAs, and we're looking forward to working with you and for future presentation and future live events as well. We're gonna invite you back, and hopefully down the road. Thank you so much. You are a great resource, powerful information. Thank you so much. And,
all right, Wing. Thanks for inviting me.
All right. Thank you.
Have a good day. Bye.
Bye-bye.